Warning, are stocks about to crash? Because we're starting to finally see those early signs of weakness. And yes, they're very faint, but they're there. I'm talking about FOMO as well. What do you mean? We're only in greed. Well, look at Bitcoin. It's up by 10% today to 88,000 in the last week, 17% higher in the last month, nearly 42%. Thank you, Elon. And year to date, it is now double. It is up by $44,000 so far this year. So what do we do as people who are, again, supposed to be risk managers? That's what we do when we are investing. Well, people were looking for 80,000 after the election. It went there, and now it's 10% higher. So what could happen with the S&P as we're right around this round number? Where did we go? We went to 600. But look here, there's a very clear pattern that, again, I said it's very faint, but it's a full candle. That could be a warning sign we're going to go lower. But what do we need? Well, we got to see some defense from the bears, which means they got to form lower lows. As of right now, we got low, higher low, higher low, higher low. And we bounced off what used to be resistance. That's very bullish. So why is it bearish? Well, let's look to a different chart. If the NASDAQ leads the S&P 500, we had an engulfing candle today. And I said, I am not sure what's going to happen here. I said to our group, again, if you want to join me, that's at thealgo.com or wait for Black Friday. I said, if we're going to get a bounce off of what used to be resistance and go back above here, not form a head and shoulders, meaning get back above 63, the market should snap back. We should form a failed breakdown into the end of the day. That was exactly what we did. Let's remove extended hours, just meaning looking at the cash market. Well, again, come on. Why doesn't this auto zoom properly here? It's a V recovery down, boop. What does that mean? It means we found buyers exactly where we expect them to. So if we find buyers where we expect them to, how is that weak? Well, it's not. What's weak is that we have an engulfing candle. So if now we form a lower low, what does that mean? It means we're running a risk of going back to test the all-time highs, which I just showed you the S&P is now past. So if the NASDAQ comes down to here, fills the first gap, curls, and then goes higher, I'm going to say that's bullish. What would be the warning sign we're going to go lower? Well, a succession of candles where we lose the previous all-time high. And this would be very notable because as we look higher here, well, yes, we are extended. We're at risk of going down to strong support. The same thing's here for the S&P 500. We've talked about those two magic numbers. That's the weekly higher low. That's the 50 MA. And as of right now, we got a failed breakout. Please remember that I've been talking about this failed break for a lot of times because last week, let's actually take a step back here for 1 second because what is an engulfing candle? An engulfing candle pretty much just means that we have a higher high and we have a lower low. We have a higher high and we have a lower low. So during the session, what this literally means is that both teams are getting feedback they are correct. Why are they correct? The bulls are seeing higher highs. The bears are seeing lower lows. And at a certain point, we got a lower low and we're below the low. By definition, that's bearish. That's literally our bear recipe. But here's a part they failed to wait for. It's called confirmation. So people seem to get really upset about this recipe yesterday. Like, oh no, here's why you're wrong. By the time you find out we're going down, it's going to be too late. No fucking shit, Sherlock. We're looking for a bear market recipe, right? Bear market recipe. If we print a lower low but fail to close below it, remember what happened in August? Oh my God, yeah, massive snapback. I was right temporarily being bearish, and then it went higher and higher and higher and then even higher. So until we close this weekly candle out or close these daily candles out, what do we have? We have a data point. As we know, we build a staircase of support and we take the elevator down. All I'm saying is that the risk we go down is now starting to increase. As we're seeing full candles or closing lower than we opened, this might be an exhaustion gap. What's an exhaustion gap? It literally means the chart is getting exhausted, right? Let's think about this. We had Thanksgiving, then we had we had seconds, then we had dessert, then we had I don't know, a little cafe, we had a little bit of cake. At a certain point, you're full, yeah. And when the volume does not really confirm the move, again, we talk about price being king and volume confirming. As we go higher here, hollow, hollow, hollow. So the gaps are okay, but the volume's now decreasing as we go higher. All right, just note that. Now let's look at the S&P. But just before we do that, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. So what do we note here? We're going higher, only 1 day above the yellow line. What's the yellow line? It's the same thing as the blue line here. It's the 50 MA, which means the average amount of volume over the previous 50 candles. There's nothing above average here. That's the low. That's capitulation. And we keep forming lower highs here for volume as we go higher. So what is this? It's a lack of sellers, right? It's called a lockout period. Traders are locked out. Why? Gap and go. You're locked out. If you're short, you're like, man, I'm sweating bullets right now. This is hurting so much. And Elon's just laughing. Why? Well, just yesterday, into Friday yesterday, short sellers lost more than 5 billion. What happened? Right, went up even more. So what happens? The losses are compounding now. Ouch, right? That's a massive ouch. So what can we do instead? Let's try to avoid the FOMO. Yes, 80,000. Now you're like, oh my God, it's over 80,000. Now it's time to buy. And that's exactly what people are asking for. So ARK is up 24% in the last 5 days. Oh my God, 0.69. Is Elon in control of the universe now? 24, 42, 69. Even GameStop is up 9%, plus 3.5 after hours. Oh my God, look at the last week. Mega big up, gang. If you're wondering what mega big up looks like, here you go. All right, grab your bingo card, pick a stonk. It probably went up. Look at Visa, 6%. PayPal even up 12. Oh my God, PayPal's up. Home Depot up 4. They report earnings tomorrow. Everything's up. All right. So now that we're above this 63, and as least for now, markets are able to go sideways. Let's look back to here. High, lower, high, lower, high, lower, high, lower, high. This will be very important because if now we go back to the chart to look at this time frame, this will be January 2024. Where were we in January 2024? Oh my God, we were right here. What happened? Market went straight higher. Yes, we formed some dips, right? Dip, dip, grab your chips. Sometimes there's dip. So when we get those dips, we have to be mindful of whether or not the market is giving us enough momentum. So high, higher, high, highest high. Then we form the lower lows, but we remain in greed and don't go down to neutral until the drop has happened. So what's important here is that we look at the same thing. High, double top, triple top. Oh my God, quad top. Well, we better make sure we get back up here and then hold extreme greed, at least for some period. Otherwise, the risk is that we could be going down. But if you're like Warren Buffett, let's read the quote. Should I wait for the S&P to crash before I buy stocks? Warren Buffett says that's like waiting for, again, a certain word. I don't want to say it because if something happened. You know why? Well, yeah, some people were thrilled. He's basically telling you to dollar cost average. So that's the best strategy in the world. For us, if we want to try to beat the market, wait for 2 areas. I expect to find buyers here. I would also expect to find buyers here. So if you shoot your shot and you got no bullets left, well, don't be surprised if we come down to support and you start crying. You don't want to be selling on support. I keep saying that over and over. So if you didn't have the balls to hold on into the election, you got to wait. You got to wait for the feedback. Trump's not even president yet. He's going to be president for 4 years. That's going to be a lot of trading. There's no need to force things right now. So what's the risk of a crash? We took the staircase up. There's a risk we could take the elevator down. It could be CPI. It could be a headline. It could be nothing. It could be Jerome Powell talking this week. There's a lot going on. So Jerome Powell talks. We got some more earnings. And right, there's your quote from the weekend. Key things we want to look for. With that said, now you can watch the video on the left or come hang out with me at 9:15 a.m. And if not, thanks so much for tuning in.